Hi everyone. So it is Thursday, the 29th of October 2020, and we are only 1, 2, 3, 4, 5 days away from one of the biggest kind of known market disrupting events, certainly for a long time. So this is going to be the US elections that will just kick off on the 3rd and likely progress for anywhere from 24 hours to a couple of weeks, depending on that. So we'll be watching Florida really closely. Florida is actually going to be a key state. If Florida goes to Joe Biden, then essentially the election is over. Then he's the new president. If it doesn't go to Biden immediately, or it goes to Trump, then we're likely to see a contested or stretched out election. Doesn't necessarily mean Biden won't win. It just means that it's going to take longer. The reason being is that it would be a signal or an indicator that there's no way the election is going to go in Trump's favor. That's basically it. Okay, so that being said, this is about oil. Okay, so right now I am more of a fan of oil. There's a lot of uncertainty in the markets. That's why, because of the election, which is why I spoke about it. And we've got equities, so we look at stocks, which are kind of tumbling as we speak. We can go ahead and have a look at those just to see what they look like at this exact moment in time. So if I just go across and let's bring up the Dow. Let's have a quick look at the Dow. So this is the daily on the left hand side, weekly and monthly, and you can kind of see the monthly coming down to a level of support here at 26,000, and we've got the weekly which broken its uptrend, so we've now officially in a downtrend on the weekly time frame, but I think we can argue we're more ranging for the time being. Okay, so on the daily we're heading down towards 26,000. If we break below that, then it's more feasible we'll start to head down towards 24,000. The S&P. So the S&P has also got a big fall down. It's kind of sitting close to a potential level of support. We could see if it does manage to rebound by the end of today, we could see that 3,300 holds as support. But also there's that potential. I like the look of this. Letting off some steam, coming back down towards 3,000 would be fantastic. Okay, if it's capable of doing it. When I say fantastic, I mean that it's healthy for the market to take a breather every now and again in order for it's kind of like winter and spring and summer. It's kind of, this is the winter before the spring and before the summer. Nasdaq is really a big one to watch. It's got a lower high here. If it doesn't break this low, if it comes down into this area and finds support, which it could around 11,000, then that is really a key indicator. But you can see here that it's really off its true value by about 10,000. So what is the true value for Nasdaq? Is it overvalued? Yes, it's overvalued. Too much enthusiasm, too much buying. Now we've run out of buyers. There's no more buyers anymore. Now it's kind of panic or selling, and everyone's going to look around and see what's the thing that they can kind of attribute it to, and they'll look at the US elections, they'll look at COVID, coronavirus, COVID-19, but it's just overvalued. Doesn't mean it just is. Its true value lies closer to 10,000 on the monthly, and certainly on the weekly towards that 11,000 mark. So if it has to go down to that, it's acceptable. It's very normal. It's cyclical. Think of it as seasonal. Has to do it so that it can kind of find it was always going to do it. Even if there wasn't a US election, it's overbought. It needs to come back down. Okay, so that's kind of the state of the market as we speak, and what that's doing to a few of the other markets. For example, say gold. Gold, in my opinion, should be closer to 1,800. It's also overvalued. Just enthusiasm pushes it kind of beyond where it's supposed to be. True value is closer to 1,800. Possibly as far as 1,600. If you follow Fibonacci levels, it's a 382 and a 618. So either of those are actually acceptable. My longer term sentiment for gold is still bullish, but it has to breathe in and out. So it's got to do that. Okay, so having set the stage for it, let's go and have a look at oil. So what I do want to highlight here though before, which is relevant, is that gold's longer term trend is actually up. And this is a big distinguishing characteristic between gold and oil. Oil's longer term trend is actually down. And most people are trying to kind of attribute them, they're both commodities, blah, blah, blah. And it doesn't really matter. The fundamentals aren't important today. Is it the fact that we are starting to reluctantly in some sectors progress towards electronic solutions? Absolutely. Should we have done that 30 years ago, from the 70s, 50 years ago? Yes, we should have. Okay, absolutely we should have, but it looks as though we're certainly starting to lean that way, if that is a fundamental explanation. We know electric companies are starting to gain ground, electric car companies, planes, absolutely. We're going to get air taxis within 5 years that are electric, all kinds of things. Okay, so that's fantastic. Liquid hydrogen, we've got some amazing stuff in our future. If we can, we've got both good and bad stuff happening. If we can make sure we've got nuclear disarmament to the downside, then we have a chance at living long enough to see kind of, and pollution, global warming, obviously take care of that. We can see the good stuff, which is the shift towards electric cars and towards space travel and all kinds of other stuff. So there's some good stuff and bad stuff that we need to be aware of. So let's just go back and have a look at this. I just need to set the stage for this. We need to understand what all the different things that are kind of in play at the moment. So we'll have a look. First of all, what you really need to take away from this, what I want to highlight here is, okay, so right now, West Texas Intermediate oil is kind of sitting above this support level. The problem is the longer term trend is down. It has actually created that swing high. The weekly is sitting at the support. So the longer it takes to break through this level, the bigger it's going to move when it does. And really it's about round numbers. It kind of is $30 and $20 and then down towards $10. And so $30 is really what's on the horizon. Certainly once it starts to break these lows, I'll be looking for any kind of pullbacks into this to look for shorting opportunities. Moving across and having a look at Brent. Brent has already fallen through and is dropping quite heavily today. Okay, so it's dropping heavily on that weekly time frame. It's a solid downtrend, downtrend, and downtrend on multiple time frames. Those are our strongest trends, and that's heading off. That's well on its way to 30. So this, for me, is where the money-making opportunities are. If I go down and just switch it up to the 1 hour time frame, this is where I'm looking for any pullbacks to find shorting opportunities to the downside. In fact, for those day traders who are trading the 5-minute time frame, this is money-making territory. It's very high probability. Considering all of the uncertainty right now for the next few days, this is the only one where the market is trending on the daily, the weekly, and the monthly in the same direction. Gold isn't doing that. The stocks aren't doing that. It's the only one that is bearish across the board. The direction doesn't matter whether it's bullish or bearish. The fact is that it's in agreement on shorter term, medium term, and longer term timeframes. And therefore, you've got different traders and investors at different levels, all at least in agreement about which way the market's going. And this is, so that's money making, and relatively speaking, it's safe because actually, to be fair, the elections might impact the stocks, but oil is not a big part of their policies. It's lower down the list. Okay, the shift to climate change or to policies that impact that, sure, and that would impact oil. It wouldn't be good for oil if Biden is winning, and if he wins, and it's likely, it's not guaranteed, but it is likely he's going to win. Absolutely, there is an expiry date on this, but there is anyway, because we can't live on the planet. I mean, if we stick to this, we won't even live long enough to run out of oils at the rate at which the climate is changing. So it just has to change. And all we really have to do is just shift across. I mean, BP and them, it's not like this is new to them. From the 70s, they've actually had the opportunity to change their technology and start being the leaders in alternative fuel sources. And they've chosen not really to do that. So kind of like General Electric has opted not to be the leader in electric, kind of in the future of electrics. So it's kind of, I guess it's just they get stuck in their way. Okay, so let's go back to this. So we look at light crude. Light crude's on its way down, man. It looks really good. It was beautiful pullback into these areas. I think I can now officially kind of get rid of these Fibonacci levels. We don't need those anymore. It's on its way. It will likely come back and test some key levels, but it's beautiful. It's a very clean trend now that it has finally committed to that. The tipping point will likely happen. So let's have a look at the bigger companies as well. So we've got PetroChina. Forget about the daily for now. It is trending down, but just look at that longer term monthly trend heading down towards all-time lows. That's nice and bearish. China Petroleum also trending down, sitting at support at this level, but the history going back to 2018, so it's the last 2 years or so, has been just heading lower. Royal Dutch going back 2018 as well, also heading down. BP, okay, in these cases, also very bearish, broken all-time lows, looking incredibly bearish. These are fantastic shorting opportunities. So for investors, shorting is not really the way to go. You're tending to look for growth over time, but for traders, that's good money. BP on the PLC side, beautiful, 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 very orderly, very deliberate. What does deliberate means? It means that the smart people and the big money are shorting it or exiting the positions, but not just exiting the positions. Others are shorting it. So that's where it's going. ExxonMobil, same way. Look at the similarity between the correlation between oils and every single one of the top oil companies. Total. Okay, so looking at Total heading to the downside, Chevron out of the US, also bearish. You can just see the similarity across the board on them. They're highly correlated, even here as well. So Marathon and then PJSE also heading low. So it's not a good buy opportunity. The longer term trend for oil, the longer term trend for the top 10 biggest oil companies in the world is down. Okay, it's screaming extinction event. I should have sort of prepared to say that a bit better, but extinction event. Look, we've got some bullish divergence here. Will we see a bit of a rebound? I do think on the daily we're potentially due. If we look at, say, Brent crude or any of these, I do think we're up for a little bit of a boost. But do I think that we're going to see a change in the near future on these? Okay, in order for that to happen, this is what I would need to see. And I would only need to follow oil. I don't need to follow the 10 companies because they'll be piggybacking on this anyway. So all of them, you can see they're correlated by like an 80 to 95% kind of correlation level there. Excuse me. So all I would really have to do is follow oil. So what would I have to see? I'd principally need to see it bounce back up, produce a bullish candle, a nice green candle on the monthly. That's how that would have to happen. Produce that on the monthly. I would then have to break these previous swing highs. The swing high that's currently in place would have to be broken, and so that would immediately go into an uptrend. If I saw that happening, then there would be a significant shift in oils across the planet. Then there's something that's happened where we've now reverted back to that, and that would be it. And if that's the case, I'll be the first person to say oil is not going down anymore. It's turning around. It's heading up. But the point of this video was really to say, look, oil's longer term trend across the board, including the top 10 biggest companies, is down. The longer term trend is that way. A lot of them are creating fresh lows. The trend is pretty much established at this point in time. There is no reason to assume it's going to change anytime soon. We might get a few couple of, for traders, we'll get some shorter term retracements on the daily and weekly. But the longer term trend, certainly on oils, it does appear that we're going to head down towards 30. Could we head down towards $20? Absolutely. Is it a possibility? Absolutely, it's a possibility. We could head down to $10. That's also a possibility. What do I need to see it happen? I would need to see a very green bullish monthly candle. That would be the starting point. And then I could look at a potential change in direction. But again, as soon as that happens, I will be producing an update on this video on that. I'm just saying that if I was going to position myself in oil right now, which I think is one of the best money-making opportunities for the foreseeable future, certainly for the next 6 months to 12 months, probabilities lie to the downside, not to the upside. And that's it. So I will be, next time I talk about this will be if there's been a significant change or an update where we've now started to hit $20 and maybe $10, then I think it's worth doing an update on that. So I hope you found this instructive and useful. If you want me to have a look at something in particular, just put it into the comment section below. And then I will have a look at that ideally. If you want me to have a look at a particular asset class or a particular sector, I'm more than happy to do that. All right, thank you.